Hello everyone. Today we're going to talk about Bitcoin, which last Friday hit a new all-time high, reaching around $118,900. A little less than that. Right now, as you can see, Bitcoin is trading at 118,486. And if in the previous video I said that you absolutely must not short, no shorts at all, then in this video I have to say that buying is very, very risky. This does not mean at all that Bitcoin can't go even higher, much higher. Of course it can. But at this point in the market, if you haven't bought already, I believe you absolutely shouldn't buy now. It's not just that you shouldn't, it's actually wrong. And now I'll explain why. But first, let's stick to our good old tradition. We'll start by looking at the monthly candles, then the weekly ones, then we'll return to the current chart on the daily candles, and finish this review with the 4-hour candle so we can see the current situation, what it suggests for us, what we can expect from it. So the monthly candles, let's remove the coloring and take a look at the monthly candles. The monthly candles, first of all, tell us about two things, actually, even three. The first thing that immediately catches the eye is the very large gap from the 50-month moving average. Secondly, this indicates that such a situation cannot last for long, because any value, one way or another, tends to return to its average. Of course, the average itself also tends to move toward this value. If right now the 50-month moving average is around $51,000, then in a month, 2 or 3, it could already be somewhere around $60,000 or $65,000. But again, Bitcoin in its current market state has a significant chance to potentially return to its crucial 50-month moving average after a substantial market reversal truly begins to take shape. I am saying this to you so that you fully understand that the $100,000 level is by no means a definitive guarantee that we absolutely won't drop below it at some point in the future. In other words, the fact that we're currently trading well above 100,000, many might see as a sign of final and irreversible growth. But there have been plenty of so-called final and irreversible growth phases in Bitcoin's history. So please be careful. Bitcoin can return to its 50-month average value. But right now we see that our candlestick has a full body and a rather small volume, right? We are already almost halfway through the month, but the volume is very low, and there are no reversal patterns at all. And for us, an engulfing pattern is considered a reversal pattern. Look here, in this case, the February candlestick engulfed the January one. And in March and April, we saw new lows being set. Right now, we don't have anything like that, so the monthly candlesticks are still indicating a continuation of the upward trend. This doesn't mean you should buy, but it does mean that for now, it's too early to consider any selling or short positions from the perspective of the monthly candlesticks. And finally, the third point I'd like to draw your attention to. Look, here at this point we have one high. Here is the RSI high. Here we have a second high, a historical one well at that time. Here, the RSI high is a bit lower, that's a divergence. And now, finally, we're seeing new all-time highs, but the RSI is even lower. This is already a double divergence. This carries risks of a decline from the perspective of the monthly time frame, and a decline on the monthly time frame is very serious. It can be large and significant. Now, I'll mute my computer so it doesn't distract us. Alright, we've seen everything we needed to on the monthly candles. It's pointless to look for any targets here, for the simple reason that we're at all-time highs and have no reference points above. To look for any targets, we need trend lines, we need chart markings. And we'll look at all of that on the daily candles. Now let's switch to the weekly time frame. What do we see on the weekly candles? Almost the same picture. A solid green candle, which indicates that the growth continues and there's no reason to sell. In other words, it's not worth shorting right now. Another question is, should you be buying at this point in the market? That's a big question. I wouldn't buy. That's it. There's nothing else to look at here. There are no divergences here. It's just growth. Growth that continues. There isn't a very large gap from the moving averages, although it is, well, quite noticeable, but it's not very big. There have been much larger ones in Bitcoin's history. We can even go back somewhere right now. Look, here the gap was much bigger. At least that's how it seems to me. Well, let's not just go by what it seems to me. Let's take a tool and look at it in percentage terms. So right here, it was large at this point, look. Here it was about 270, maybe 250%, right? Now let's see at the current moment how far we are from the nearest moving average. 36%, well, 250% versus 36, you see the difference is really, really big. Let's remove the markup. Basically, there's nothing else to look at here. The growth continues, that's it. But I'd like to draw your attention to the following point. It's a completely local point, but nevertheless, you should keep it in mind. The Chicago Mercantile Exchange, where Bitcoin futures are traded, closed on Friday at $118,140. And this price, as a rule, acts as a magnet price until the start of the next week. This means that right now Bitcoin is trading at 118, 500, maybe 600, 119, perhaps we'll see. But at the beginning of next week, or maybe by the end of today, it is very likely that we will return to the level of Friday's close on the Chicago Mercantile Exchange. That is 118, 140. So this is yet another reason why you shouldn't open long positions here and now. And if you already have long positions, at least consider partially taking profits so that you can re-enter at a lower level, at least around 118, 118, 140. That's it. We've seen everything we needed to here as well. There's nothing else to look at. Now let's switch to the daily candles. And here we'll focus on just 2 points, yes. The first point is this crossover of the 100-day and 200-day moving averages, which indicated that there was a high probability we would update this high, and potentially even this one, the historical high. After that crossover, we updated both of them. That's it, it played out, and now we can forget about it. The second point I'd like to draw your attention to is the RSI value. It is in the overbought zone. This is considered the case when the RSI is above the 70 level. But overbought conditions by themselves only indicate that the market has risen very high. They are not a reason to open a short position. In other words, this overbought condition can persist for, well, an indefinite amount of time, so to speak. That's it. For us, the key point in this zone is the presence of divergences. Now, that is important. And look, for example, there was an uptrend here. See, there's a huge overbought condition, a big one, right? But then we get a higher price high with a lower RSI high, then an even higher price high with a still lower RSI high, and finally yet another higher price high. Well, here the high was updated just a little compared to the previous one, but it's noticeably lower than these two that came before. And this indicates that a very strong reversal pattern has formed here in terms of divergence, and in fact after that we moved downward. Right now, there is nothing like that. And we can say that on the daily candles the uptrend is still continuing. What else should we be paying attention to? We should be paying attention to engulfing patterns. Let me show you an example of such an engulfing pattern so that everything is absolutely clear to you. Look, here we have growth. Growth. And then a large red candle very clearly engulfs this green one, which at the time it formed was setting a new high for us. This engulfing pattern eventually turned into a rather deep correction. Look, was there an engulfing pattern here or not? I don't know. Maybe there was, with two candles? Yes, there was an engulfing pattern, but it didn't develop further. This means that not every engulfing pattern leads to a correction. But if you opened a short position on this 2-day engulfing of a single green candle, your stop should have been placed above the wick of this candle. And entering accordingly at the close right here would have been wrong, for the simple reason that the distance to the stop would be too large. If you were planning to open a short position based on this engulfing pattern, it would have made sense to open it either from the middle of the green candle or even from its base. And look, we actually went down to the base of the green candle, well, not the base, but to the closing point, right? You could have opened a short here. Your stop should have been placed right here. And after that, there was a decline during which you could have moved your position to break even. So if you don't rush, you'll get the right entry point, which will allow you to move your position to break even and not lose much, even if it doesn't work out. In other words, you shouldn't just open a short immediately after the engulfing pattern appears. You need to wait for good prices. As a rule, pullbacks happen even with these reversal patterns. Just look here, for example. Here's a green candle and we engulfed it. It's wrong to enter a short here because the stop loss would be too large. This stop should have been placed above the wick of the red candle. Accordingly, we open a position either from the middle of the green candle or from the top at the close of the green candle. There was a correction to the middle of the green candle, yes, a correction of the decline, and then the drop continued. I think everything is clear. And now here, again, there are no engulfing patterns, no reason to short. Now I'll turn on the markup that I had enabled. And what do we see here? Here we see, I'll show it first from a long distance, then from a short one. Here we see an ascending channel. Let me tighten it up a bit more so this is how it looks. And what do we have? We went from the lower boundary to the upper one, then back down to the lower. Yes, the channel is drawn based on these points, but relying on it, we can assume that Bitcoin could rise to the upper boundary of the channel, which, with a slight shift to the right over time, is in the area $132,000, that is. $130,000 and above. But this little line, this mark, it divides the channel into two roughly equal halves. And it indicates that from this area, from the middle of this channel, let me draw another line here. So we are talking about this channel right now, right? And this line splits it in half. And so from somewhere in this area, we might see a correction down to here. And then, for example, only after that, a continuation of the growth. Or the second option, it could go straight here right away. And I don't know which will happen first. But what I do know is that right now, at historical highs, it's not the right time to buy or open long positions. That doesn't mean the market can't go higher. It just means that buying here is wrong, technically wrong. You need to wait for a correction. It could be very large, significant, and only then should you buy. Moreover, this correction, most likely, if it happens, will be to the previous all-time high, which is located, let's take a look at where. Just a second. It's precisely located, well, in the general area. Okay, we definitely need to use the magnet tool now. Where's the magnet? Here's the magnet. So, well, here we need to select correctly by the candle's wick. It's located in the area of $111,980. So, right here, or maybe even lower, around 110,000, we could see a correction. And again, this is the standard pattern. Right here we have a huge green candle untraded. We could at least come to. The magnet is getting in the way a bit here. Let's turn it off. We could at least come to the middle, to the halfway point of this candle. And that's our level. Let's mark it as well. Just roughly, okay? That's our level, let's say around $114,000. So somewhere around these points, you can already start considering buying. But again, after the correction, you need to see an engulfing pattern, a bullish engulfing, where a red candle is engulfed by a green one on some smaller time frame on 4-hour or 1-hour candles. So, to sum up, Bitcoin is potentially aiming for the area of $130,000, but it's ready to correct. It may correct before continuing its growth to the area of 114, 115,000, and potentially $110,000, $111,000. That's clear. Now, let's clear everything and switch to the 4-hour candles to assess the current situation. And here we have a very interesting picture. Look, according to the RSI, when we set the new all-time high, the one that's current now at $118,869.98, the RSI was just off the charts. In other words, it was somewhere way up in the sky, up there in the heavens. But now, after a significant period, it has cooled off considerably, dropped down substantially, and we are indeed ready to set a brand new, unprecedented all-time high for Bitcoin. But pay attention, the RSI is already significantly lower. And this means that we are seeing a potential divergence forming on the 4-hour chart, which indicates a very high risk of a decline. We can only talk about a full-fledged divergence when, first of all, we see a new high, and after that, a red candle that engulfs the growth candle. Only then can we say that we have both an engulfing pattern and a divergence, and the probability of moving downward is very high. Where to? To the nearest moving average. At the moment, that's the area around $112,000. That's all, I have nothing more to add here. So, we are waiting for the growth to continue, but we only enter a position after a correction when we see the corresponding reversal pattern. At the bottom, we will see a bullish engulfing pattern on the 4-hour or 1-hour candles. For now, either continue holding your long positions, supporting them from below with a stop loss, or take your profits and, again, wait for a better entry point to go long. If you had chosen to go long before this. Hugs and kisses. See you next time. Goodbye.